Hello traders, this is Chris from AAAFx taking a look at the dollar yen. You can see the dollar yen got hammered during the trading session. Thursday was pretty rough on the US dollar in general. And now we are where we could separate the wheat from the chaff. This is an area that I think continues to be important. This 142-ish, 141 level. We also have this uptrend line, and the 200-day EMA has offered a lot of resistance. A lot of this is going to come down to, are we focused on the Bank of Japan or are we focused on the Fed? The Bank of Japan has already told us that it has no interest in tightening monetary policy. But when I zoom in and look at this weekly candlestick, that's ugly. And that does suggest that we are going to go lower. But we need to take out this trend line. Basically, what I'm using as my proxy is taking out the lows of the previous week. As far as buying is concerned, you still do get paid to hold this pair, but that's becoming less and less of a factor as traders are betting that the Fed is going to start cutting next year. So some traders, a lot of traders actually, believe that the Fed starts cutting in March. If we were to turn around and take out 145 to the upside, that would be very bullish. But it would take a pretty significant amount of momentum to make that happen. We aren't quite there yet. And this next week, of course, is going to feature Christmas on Monday. The jobs report the following Friday. So I really think at this point in time, you have to be somewhat cautious. The next week or so is going to be very funky, but we could get that breakdown. And if and when we get that breakdown below the lows of last week, the trend probably changes.
AAAFx.